Hey everybody, this is David Skarica. So I want to apologize for my technical difficulties earlier. Like I said, the power was out here. We had this cold front come through. I'm always happy about the first cold front of the year because it wouldn't be what you perceive as cold. Just it's a few degrees cooler, and usually there's some wind and rain. But usually that first cold front when it occurs, which is usually mid to late October, kind of signifies the end of hurricane season. There's actually a larger cold front coming next week around Tuesday or Wednesday or this upcoming week. And it will be like have 30-mile-per-hour winds, almost tropical force type winds. And that kind of cold front really signifies the end. Like usually that kind of cold front is the absolute end of the hurricane season. So we're always it's kind of like, when you first move to the Bahamas, all you want is like heat and sun. And then once you're here, you're kind of like, actually by October, you're like praying for that first cold front because you get sick of 90 degrees and humid every day. Like, it's nice. I didn't have to, other than maybe because it did get a little sticky after my power went out. I put the AC on for maybe 20 minutes just to kind of cool off the house and get rid of the humidity. But other than that, like, I didn't have to use my AC all day or night, which is great because, you get sick of that, just like heat and humidity. And so what happened was when the power came back on, for some reason, my laptop was plugged in. The power coming back on cut off my mic. So in the future, I'll know that when the power's off, because my computer isn't charging anyhow, I'll just unplug that mic when the power's off. Because my internet connection not changed because I was already on my tethering from my phone. So I apologize for that. We're going to do a little more detailed stock chart of the day here for you because of that. Of course, we'll have our paying update for our Patreon members as well. So one thing that's interesting, because we're going to do a little more detail, I'll get into gold, back into gold and the market itself. So one thing that's interesting, well, we'll actually look at the VIX. Well, here the VIX is that we kind of have, we can see the VIX is really the highest level since earlier in the year. So I think it looks like we could actually have a real correction. And one reason I've never thought that 2022 bear market, that was the bottom, because if you go look at these bear markets like 2020 or 2008, even the 2015, 2016 correction, usually you need something more fear than just that mid to late 30s. Even the early 2000s, I think after 9/11, the market, the fear gouge went to near 50. So you don't have to have extreme like 2020 during COVID or 2008 during stock market crash and financial crisis. The VIX doesn't have to go to 80, but usually if you want a good bear market bottom, especially like a real longer term bear market bottom, getting that VIX to 50, 60, that sort of thing, some real fear is usually the way to do it. And if you actually looked at 2000 to 2001, we can quickly look at that just to show you this. We'll start in 1999 and we'll go to 2002 just so you can see this here. What you can see is all through 2000 and 2001, the sign that we had not yet hit a major bottom in the stock market was that the VIX, you can see, never really went above the late, the mid 30s. And then during 9/11 it spiked, and then it went even higher at the bottom in 2002. So it's really simple in retrospect. When this VIX hit 44, 45 in 2002, and if we go look at the S&P during the same time frame, you can see that ended up being the bottom. And even if you had thought that was the bottom after 9/11, the S&P did not go significantly lower over the next year. If you had bought that bottom, say, at 900 on the S&P, well, it did go to 800. But what is that? That's 11% lower. That's not like some huge move lower, right? And then if we go out, you'll see, ultimately, the market was higher years and years later, right? So if you had even, like I said, if you bought here because you saw the VIX go to 40, 45, it's actually 950, but still 150 points lower isn't that much lower. It's like 16%. So, and then any time basically after 2004, you would have been up if you had bought the VIX going over 40 in 2001. And then definitely down here, and then you can see the decline in 2008. And if we go look at the VIX again, what you'll see, and again, you'll see this in 2007, is that, again, look at these moves in the VIX where you didn't go above that, 40. And again, it was a sign this was not the real low yet. And then, of course, we had the ultimate fear during the financial crisis. So that's something to kind of look out for as the VIX, we're at 21, so we're nowhere close to that. But as the VIX kind of climbs higher, so again, we'll look at the S&P here. And if we look at the S&P, we can see you can see the S&P is back at its lows and just broke below the 200-day moving average. Now, again, the 200-day average doesn't have to be the end-all be-all. It broke it here in the first quarter of 2022, actually rallied above it, and then continued to fall. But really for the rest of the bear market, the rest of 2022, that 200-day moving average, this is the 40-week moving average, which is essentially the same thing, did represent resistance. And then it kind of has represented support since we've kind of bottomed in the first quarter of this year. So the question is, is this enough of a break? We probably really need to break below 42 or 4,100 in the S&P to really significantly signify where the next move lower. And what it would look like then is that it looked like this, all this was, and this is one of the longest bear market rallies in history, but it would look like this was just a failing type rally that now it's rolling over. And I've talked about in the past, the issues with those big 7 tech stocks being most of the averages. And history shows us that when the market gets thin like that, the rest of the market doesn't catch up to those big stocks holding up the averages. What ends up occurring is the opposite. The market goes up, the market goes down into the other average. So the market goes down, as those stocks kind of catch down with everything else that is lagging. So anyhow, I just wanted to show you that. So, but again, what's interesting here in this last move, which has really happened since the advent of this conflict or war or, whatever you want to call it in the Middle East and the Gaza Strip in Israel, what we can see is, I think now you're seeing more of this uncertainty. Of course, I saw now they're asking for money. Congress is asking money for Israel. It's actually much smaller than what they get, and they're trying to throw the money. I think that's one way they're going to try to get that money from Ukraine, because one reason we nearly had that government shutdown is that when they made a deal, they had to throw the money out that they give to Ukraine. So you're funding these wars, and then you're going to see you've got higher inflation. Wars usually breed inflation. Obviously, if there's some further conflict in the Middle East that could increase oil prices even more. So there's more uncertainty, and of course, that's the stock market doesn't like uncertainty. And I'm going to show you what's interesting about that in a second. So we look at that. So let's look at some individual stocks before we get into that. So I just thought I'd show you Tesla. Tesla had pretty rotten earnings, and you can see Tesla is kind of, back to this low here, which I guess would be support, and broke below its 200-day moving average as well. This looks here, we haven't quite broken that yet. Like we're right there. This was 212. This is 212. We're only with technical analysis, it's an art, not a science. Sorry, my cat is below my desk and just put I didn't see it there. So anyhow, like I said, this is an art, not a science. And if we break, I would say 205 or 200, that would be more of a clear break. And we probably then would go to this 150, 160 area. Would recommend this RB, the next support. So we can see one thing I like about point and figure charts is they put everything in perspective, and you can kind of see here again. I would think that Tesla, this whole rally here from 100 to 300, that's a huge rally, a triple, but it failed well below the highs of late 22, excuse me, of late 2021, early 2022. So I would think that this is taking a long time, but it just looks like to me like this is, and you'll see it even if we go on a longer term chart, we'll see that you'll see it even more apparent. Like let's get like a 3-year chart. You can see like this looks like kind of like a failing rally here. And then you got this top in the failing rally. And then now like looks like you're going to roll over. A 3-year chart doesn't even put it into perspective. A 5-year chart will. Yeah. So you can see kind of the decline from late 2021 to the end of 2022. And then this looks like a failing rally. And now we're about to roll over. So that's Tesla. The one that's really interesting is NVIDIA. NVIDIA, again, NVIDIA is one that went to new highs, but it looks like we got this topping formation going on in NVIDIA. I've talked about it for a while. NVIDIA actually was up a bit when the market rallied early in the day and then reversed. So one reason, I've been holding on to my shorts again for paying members. We'll talk about this in a little more detail, but NVIDIA kind of is either this is a consolidation or a topping pattern. So I definitely think if we break 400 in NVIDIA, then you got a little bit of support here, 375, and then really then you're looking at closing the gap afterwards. And of course, they had restrictions put on them about selling some of these AI chips to China, et cetera, et cetera. The stock I've talked about in the past has this big, huge valuation. It's kind of the stock everybody owns right now. So that always scares me as well. So just watch that here. And because it has been the darling, even more so than Apple, Amazon, Tesla, et cetera, it's probably going to be the last stock to really break. So that as well. So again, if we go back to the S&P, so what's interesting here now that we go into gold and silver is, again, we look at the VIX, like I said, you look at the S&P here, the VIX looks like it's just starting to break out above this resistance, this 20 to 21 area. We closed at almost 22 today. And that would mean, of course, the market would move ultimately lower. And it looks like the S&P is about to break down. We're right at support. We're right at the moving average, et cetera, et cetera. You can see the spider is actually a little above the moving average, where the S&P is actually a little below. So, again, it's not the end all be all. You can see we went slightly below here. So I want to see a real break. But what I find interesting about that is where gold and precious metals were kind of trading as, lack of liquidity or, increasing rates, et cetera, et cetera. It seems to me now since early October and this conflict in the Middle East, you can see the S&P falling here and gold rallying. So it seems to me that we're seeing the gold starting to be a safety asset, a hedge, and people flocking to it as that flight to safety. Silver, you'll see as well. We came off a bit here, and part of the reason silver went to its, 200-day moving average again, and gold, we don't see it on the GLD, but we'll see it on the gold chart itself. Gold, you can see hit 1994 today. So, we closed at 1983, and good year, by the way. The last year the Raiders won a Super Bowl. But anyhow, you can see we went to this like little resistance here, and often that 2000 can represent. You can see it happened in February. Went to about 1950, 1975, and that can represent a real psychological resistance. And I think a lot of computer programs come in and they sell it, et cetera, et cetera. You can see now that we're up here, we're also overbought. So it wouldn't be surprised me if gold consolidated for a bit before it really moved higher. And of course, that 2050 to 2100 area, like I showed earlier today, and we'll show it again right now. We'll go back 6 years so you can see it. That really represents a lot of resistance because we've hit it 3 times in the last 3+ years, and every time it's failed. But it also means there's a saying in technical terms: the longer the base, the more the space. Once we break that, and you can see it happened again. If we go back 10 years, it happened in 2018. It's basically really 2018 to 2016, sorry, to 2018, 2019. That 3-year period, we kept bouncing down off 1350 to 1400. And so that was that when that 3-year break happened, breaking, of that resistance, the breakout was huge. It lasted a year. Gold went to over 2100, went to new all-time highs. So, and actually a lot of currencies, euros, Canadian dollars, etc., like gold is hitting, like let's put it against the Canadian dollar here. Because remember, when gold hit, its high back in, 2011, Canadian dollar was par, right? So you can see in the Canadian dollar terms, gold is, it's a little lower than the high this year, but we're right again towards that all-time highs. And if we take the euro, we're right at the all-time highs. You can see, look how much higher we are than the 2011, 2012 highs in both euro and Canadian dollar terms, because those currencies are lower against gold. Like I remember back then being in, some juniors that did well. And I think I've told the story about selling a junior and buying my house with it. And when I transferred the funds, the Canadian dollar was par. I think it was even a few cents higher than the American dollar at the time. So I know, but what I really wanted to show you was that it looks to me like gold, as these tensions heat up around the world, it looks like now, deficits are going to increase. Of course, that war usually fuels inflation as well. It looks to me like now gold is getting that safe haven bid rather than just trading lower because interest rates are trading higher. Now rates did go down a tiny bit today in the 10-year bond, which we'll quickly look at as our last chart now. But the thing about it is gold rallied through all this, through almost the 10-year bond going from almost 4.5% to almost 5%, 50 basis points in just over a week, but gold rallied. So something's going on, you know. So I'll leave it on that. Again, I apologize for the audio thing that's going to happen. But this is my more detailed stock chart of the day for the weekend. So everyone have a great weekend. I'm going to be blasting this out Sunday morning. I'm doing it Saturday morning. I may even blast it out Saturday. Matters how I feel. So I like to do it Sunday because even though I'm a big football fan, I know not everyone is. And I just find Sunday I get really good views when I blast these things out Sunday. And the reason being is I just think a lot of people, have time on Sunday, right? Maybe you're running your errands on Saturday, and Sunday you can kind of relax. And so that's when they like to watch these things, etc. So that's why I'm always going to try to do stock charts of the day on the weekend. I like it too, because I can be a little more in depth. I'm not watching the markets, not watching my stocks, et cetera, et cetera. So, yeah. Anyhow, I hope everyone does have a great weekend. Patreon members, watch out for the Patreon, and lifetime members, watch out for the pay version, where we'll talk about some positions and stocks, etc., that we own, and shorts that we have, etc.